Hi and welcome to our in-depth analysis of the Bank of India Small Cap Fund. In this video, we will provide a comprehensive understanding of this mutual fund, from its basic details to its investment philosophy and risk factors. The Bank of India Small Cap Fund is a popular mutual fund suitable for those who are looking to invest money for at least 3 to 4 years and looking for very high returns. Let's start with the mutual fund analysis. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let's start with the basic details. The Bank of India Small Cap Fund is an open-ended equity scheme. It was launched on the 19th of December 2018 and currently manages assets worth approximately 1,052 crores. The net asset value as of the 13th of May 2024 stands at Rs 40.23. Let's take a look at the classification portfolio of the fund. This fund falls into the equity category, and more specifically, it's classified as a small cap fund. This means it primarily invests in small cap stocks but has bought into large and mid cap stocks. First, let's look at the portfolio mix by market cap size. Regarding portfolio composition, large cap accounts for 7.9% of the total composition. Mid cap accounts for 12.3% of the total composition, while small and other accounts for 78.5% and 1.3% of the total composition of the fund respectively. Second, the top 10 holdings of the fund. Here are the top 10 holdings of the Bank of India Small Cap Fund, in which Clearing Corporation of India Limited, Avenue Supermarts and BSE Limited are the top 3 holdings of its portfolio. Third, the top 10 sector exposures. The fund is exposed to various sectors. Here's a breakdown of its top 10 sector exposures, in which capital goods, auto ancillaries and banks are the top 3 sectors, while the fund has also exposures in other sectors. Now, let's look at fund managers and their tenure of managing the scheme. The current fund manager is Dhruv Bhatia, who have been managing the scheme since April 27, 2022. Dhruv Bhatia has worked with AUM Fund Advisors LLP and Sahara Asset Management Company. He has a bachelor's in management studies in finance and postgraduate diploma in management in finance. Now, let's take a look at the investment details of the fund. The Bank of India Small Cap Fund is a small cap mutual fund scheme with a minimum investment amount of 5,000 rupees for lump sum and 1,000 rupees for SIP investments. There is no lock-in period for this fund, but an exit load of 1% is payable if units are redeemed within 1 year beyond 10% of the investment. Now, let's look at the returns generated by the fund. As you can see, the Bank of India Small Cap Fund has outperformed the S&P BSE 250 Small Cap Index over the past 3 years. You can also see the performance of other funds of the same category as compared to the S&P BSE 250 Small Cap Index. Now, let's look at the various risk factors associated with the fund. The Sharpe ratio and Sortino ratio both show that the Bank of India Small Cap Fund has a higher risk-adjusted return than the S&P BSE 250 Small Cap. Second, let's take a look at the top drawdowns. Here is the historical drawdown chart of the Bank of India Small Cap Fund. It gives you insights into how the fund performed during market downturns. Now, let's move on to the investment philosophy. The investment objective of the scheme is to generate long-term capital appreciation by investing predominantly in equity and equity-related securities of small-cap companies. The fund's investment team picks stocks based on their research, without any bias towards a particular investment style. Now, let's take a look at the taxability of earnings. First, capital gains taxation. If the mutual fund units are sold after 1 year from the date of investment, gains up to Rs 1 lakh in a financial year are exempt from tax. Gains over Rs 1 lakh are taxed at the rate of 10%. If the mutual fund units are sold within 1 year from the date of investment, the entire amount of gain is taxed at the rate of 15%. No tax is to be paid as long as you continue to hold the units. Second, dividend taxation. Dividends are added to the income of the investors and taxed according to their respective tax slabs. If an investor's dividend income exceeds Rs 5,000 in a financial year, the fund house also deducts a TDS of 10% before distributing the dividend. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.